Hello, we are back. Here we go. It is Thursday, December 8th, 2022. Oh man, what a day. What a day. Thursday, December 8th, 2022. We are here to once again open the markets in the world of stocks. It's time, everybody. It is absolutely time to open up the markets once again. Let me just tweet this out into the world. Live market open. I slept pretty late last night. 4 a.m. So I was sleeping. I had to wake up by 8. My mom actually is a little sick today, so I've been taking care of her. She took off from work. So that's that. Let me put this in Discord. Live at here. Boom. All right, here we go. We are live. We are live. Alvarado, Ahad, Quarantine Quartet, Futbucker, Marco, Sethi, Roth, Cameron Investing, Jason, Nicholas, Felicia, Kane. Hello. Okay, for those that are wondering what happened to Daily Cowbell, it's been a rough week, bro. It's been a rough week. I've been free. Tom has he'll probably talk about it today because we're planning to do an episode today live around 2:30. He said by hell or by fury we're gonna get it done. He's just, it's like his kids are just like sick, man. Like he has to, and I don't think the guy has slept in a couple of days. He hasn't posted a video on YouTube, if you've noticed, in the past couple of days. And that's not like Tom. Tom doesn't go without posting a video, usually 1 or 2 day max. So that's why we haven't been able. I know it's nice to feel needed though. It's nice to feel that people miss you. I see on Twitter, people are like, where's Cowbell? Where's Cowbell? I'm like, damn, people really want it, which is nice to know. And it sucks that we haven't been able to deliver, but yeah, he had some family issues, but we're here. Get someone else on. It's hard to replace the Cowbell, bro. It's hard to just put a swap in there. Matt, wake your ass up. Wife was sick as well last 2 days. Now I am. Yeah, look, my dad got the flu last weekend. He's recovering. His uncle and his mom got the flu, which is my grandmother, or sorry, his brother, so my uncle. And then today, my mom, apparently, she woke up and she was just like, her head is hurting. She took off from work, and it doesn't say she has a fever on the thermostat, but it definitely seems like she's just super cold and stuff. So she's downstairs. She's recovering. Hopefully she goes well. If she has a fever or a flu or something, it is flu season, right? Or that happens January, February. Well, it's December. I haven't gotten sick since August, and when I had COVID. Now let's see if that happens. If I get sick again, but if she gets sick, I might end up getting sick because of her. So we will see. Okay, my wife's sick today too. Damn, everyone's sick. Okay, so let's talk about this Palantir $9 billion deal. All right, so let me pull up an article real quick. It's a cloud. I'm making a video on it a little bit later. Some of the headlines you're seeing is not the best on it because Palantir wasn't supposed to. They were kind of supposed to get this deal, kind of not supposed to get this deal. When I mean misses out on it, I mean they're not the award winners of it, right? So Google, Oracle, Amazon, and Microsoft awarded Pentagon cloud deal of up to $9 billion combined. The outcome of the Joint Warfighting Cloud Capability, or JWCC, which was the name of the deal effort, is in line with the U.S. Defense Department's effort to rely on multiple providers of remotely operated infrastructure technology as opposed to relying on a single company, a strategy promoted during the Trump administration. Last year, the Pentagon changed its approach, asking for bids from Amazon, Google, Microsoft, and Oracle to address cloud needs, but the General Services Administration stated at the time that only Amazon and Microsoft seemed to be able to meet the Pentagon's requirements. Now, why do they say only Amazon and Microsoft? Because you need IL level 6 security clearance with the DoD, which only Amazon, Microsoft, and Palantir have. So why are Google and Oracle now getting into the deal? Essentially, the reason I think Palantir missed out on this deal, which I don't think they've officially missed out on it yet, is because this is a cloud computing deal. This is not a data integration deal. What I mean by that is, like, my startup, for example, runs on AWS. So we pay AWS because their servers host all of our data. We would pay Palantir in the future one day if we get big to like help us analyze our data, which are two different things. AWS can kind of do that, but not at the level of what Palantir can do, right? Palantir is not a cloud company. They're not like Cloudflare or Net or anything like that. So they're not trying to like host your data in some server that you pay for every time you like someone uploads a piece of content to the platform. So the DoD and the Pentagon have tons and tons of data that they need to be able to have secured in one place. So I don't think Palantir was ever going to get this deal because the goal of this deal is not to serve cloud compute. the goal of this deal, the goal of this deal is to serve cloud compute, and Palantir doesn't do that, right? That's not what their goal is. Their goal is to help you analyze the data. So there is a world in which Palantir gets a bit of this money, but through being a subcontractor for Google, Microsoft, or Amazon. And most likely it would be Google because they've already worked with Google in the past. So we would see if that happens. But I don't think it's a big deal that I don't think they were ever going to be part of the 5 companies that get this deal, because this deal is for cloud compute, and Palantir is not going to set up a cloud infrastructure for the DoD. Like, if anything, why didn't Snowflake get this deal, right? Like, like that. But obviously AWS, Azure, and Oracle's cloud and GCP, those are like the premier cloud. I mean, they should be getting this deal at the end of the day. So some of that $9 billion hopefully spills into Palantir, but we'll see what happens. I agree with the deals they secured this week. Yeah, and they secured a lot of deals this week. Lockheed Martin, Cleveland Clinic, Tampa General Hospital. There was one more they did yesterday, the CDC deal. So it's not bad. I don't think they really needed. I mean, it would have been nice to have it, but this is just not the type of the deal that they were going for. Bro, my wife, 3 kids spent the last 2 weeks. Yeah, everyone's getting sick, man. Everyone's getting sick. I'm down over 37% this year. This low-key sucks. Guys, you need to fall in love with losing. You're complaining too much about being down only 37%. Because there's people whose 37% is in the hundreds of thousands, if not millions, and there's people who are down a lot more than that. So Tesla, 174. We got 171 pre-market. Tesla short sellers, I just saw an article, have made about $11.5 billion in profit this year. So if you shorted Tesla at the beginning of the year, let's see where it was at the beginning of the year. You probably made out well. January 2022, we were at about 317, and then we ran up to 377. So if you shorted pretty much anywhere, I mean, along this chart, you would have made some money. Obviously, in January, February, March probably would have been the best time to short. But the reason you don't short is because Tesla could have gone parabolic. You never know, right? And so that's the risk when it comes to shorting a stock. What deal did Palantir miss out on? It's the $9 billion deal. I'll do another video on it to go more in depth. So we'll do another video to go more in depth. But it's a cloud computing deal. It's JWCC. If you type that in on Google, you will find it. Michael Burry wish he kept his short. I wonder if, Michael Burry said he wasn't short a couple of months ago. I wonder if he closed that position or if he ever made any money off it. Getting close to the chicken. So Tesla still has a lot to fall before we get to chicken genius levels, right? Because he wants to get us to 140, which would be a 24% decline from here. So for Tesla to get us to 24%, to go down another 24%, that's gonna be a lot. I mean, it could happen, sure, but like that's a lot of money for them to go down. Lots of people on here are young. Their first time experiencing a down market. It's been a bull run for them. Yeah, and I think that's quarantine credit. That's such a good point. This is my first bear market because I got into the market in 2019. So even 2018, when there was if you guys remember, from September to December, my friend was investing. He was a senior. I was a junior. I didn't really know what investing was yet. And he lost like $15,000 on Snapchat options. It's so funny because I just remember us being in the car. He's like, yeah, I'm going to lose 15K. No, he was in the car and he was like, yeah, if it goes above or below this price, I make XYZ money. And I was like, all right, whatever. And then I called him 3 weeks later. I was like, so how are those option things doing? And he was like, I lost $15,000. And I was like, what the fuck? I was like, how do you lose $15,000? It's crazy, bro. That's when Snapchat was $5, by the way. That was 2019 January, which if we go to that, look at this, 2019 right here. It was at 482 in the lows of 2018, and then we worked right back up in the $5, $8 range. And now, 3 years later, we have this massive run up. It goes from 5 to 80, up almost 15 times. It's about 16 times. And now it's right back down to where it was in 2018, 2019. Insane, man. Insane. All right. It is not September. Wow. It's December 8th, 2022. Comment below if December is better so far in these 8 days than September was in 2022. 9:30 a.m. S&P at 395. The market is now open. Wake your ass up. I hope that didn't annoy my mom because she's having a headache. So hopefully that wasn't too bad. But she's downstairs. So hopefully she doesn't hear it. All right, here we go. Meta platforms 116.88. I have officially decided I will start a position in Meta. I don't know what the price yet. We will see. But Meta, I'm on the train. Maybe I'll make a video on it later explaining why, but I'm on the train. I'm going to be buying Meta. Don't know when, but I'll be buying it. You can't convince me not to buy it by telling me Zucks is evil because there's 3.7 billion people. So 3.7 billion people, even if he's evil, like using his shit. Apple 142.63, Microsoft 245, Google 95. So we're a green market today. It's not continuously a fourth day of red on this Thursday this week, but the green is not a lot of green. Rocket Lab up 1.78%, Palantir 0.35%, Disney 0.4%. I was looking at Palantir puts, buying cash secured puts. The premiums are not amazing. They were giving like $41 for every 100 shares for January 2023, $7 strike price expirations. I don't know if the premium's amazing, to be honest. I also think it's going to be below 7 by January 2033, or it's very likely it could, right? It's not like it's like below $4, $5. I would say no. Below 7, it's very possible. It's just very possible. So we will see. Unity 33, Snowflake 137, Salesforce down. Wow, 1.94%. Robinhood 0.32%. Taiwan Semiconductors finally drops below 81. It hasn't seen it below 80 in a while. AMD at 70. NASDAQ right above 10,000 at 11,004. Enphase down to 318 as well. Meta is a buy, bro. I agree. Carvana. Okay, let's talk about that. Real quick question a bit. Where do you find information on what the expected CPI numbers are supposed to be for the next report? I think if you just Google it, you'll find a bunch of articles reporting it. Most of Bloomberg and CNBC will report like expected CPI. CPI comes out in about 5 days, so we'll know from then. But yeah, I think there probably is like an official website on the Fed, maybe the St. Louis Fed website, but I think the major media outlets will explain. Look at this crash, man. Carvana was $370 in April 2021 or August 2021. I didn't even know Carvana was still a thing that was important, bro. Like they went public in 2017 at $12. I didn't know they were relevant. Like I didn't even know what they. I mean, I know what they do. I know what they did, but I didn't like. I was like, Carvana. Why is this so important? I saw their ads on TV, but $3.50 to now $3 and it's $4 today. A lot of people have made some money buying puts on this bad boy. I don't know if shorting it or buying puts at this point is it's already collapsed almost 98%. The question is, do you want to take the chance to run it down to that final 100% down? I mean, maybe, but I don't know. Have you and your parents had the cowbell talk yet? Intervention time. That's funny. I sold Tesla puts $100 by March. Okay. I mean, 100 by. So what was the premium on that, Ryan? Was it a decent premium or it was okay? NVIDIA over the metaverse is dumb. Omniverse and digital twins and providing the hardware for it are way better to profit from VR. Yeah, I don't care about the metaverse, guys. I made a meta video back in January. If you want to go check it out, when I was buying it at 300, I ultimately sold it and took $1,000 L and just put it into Palantir. I don't give a crap about the metaverse, bro. I really don't care at all. I literally just care about their family of apps that reach 3.7 billion people every month. Like at some level, we have to ask ourselves what other products in the world can do that and can do that profitably. And Meta has 81% gross margins. I mean, this is not even getting emotional anymore. This is just like numbers are screaming that this guy is. And again, you have to do your own due diligence. You have to be comfortable owning this guy. Price of sales of their market cap is $306 billion. They did revenue of $128 billion. I mean, the multiple is, forget compressed. It's been destroyed on this company. I don't think Webull tells me their free cash flow. I'm going to look at their free cash flow, but I think their free cash flow multiple also isn't like that high compared to something like Google or Microsoft. Microsoft has a 28 times price to free cash flow. Google has a 20 times price to free cash flow. I'm going to try to look up what Meta has, but I don't think it's as high as those either. Amit, you still hold Meta? Nope. I sold it. I had 10 shares. I sold it, took $1,000 L, just bought like 100 something shares of Meta, a little bit more, 200 shares of Meta. So about the time 140 is totally possible, even below that during worst times of next year recession. Yep, I agree. It is very possible. It could be train horn. That's how you do it. All right. Shout out to 216 people being here. So on Carvana, again, I don't think buying puts or shorting it right now makes a lot of sense. I mean, it could still go down. The question is if it's worth buying on given how down it's already been. Some of the Palantir SPACs: Babylon Health 0.52 cents, Black Sky 196, Lilium 122, Wejo 0.77. So been pretty hit. Did you guys hear this story? Apparently FTX was trying to give Taylor Swift, the Swifties are gonna hate me for that, $100 million to sponsor that tour. That is kind of wild, bro. Early this year, the crypto meltdown was draining the industry. 30-year-old billionaire who relied on branding and hype to rapidly take his crypto exchange from upstart to stalwart was signing up one more big name. The people close to FTX and Bankman-Fried told CNBC that the former CEO lobbied aggressively for a partnership with Taylor Swift. $100 million over 3 years. It was close to coming to fruition before it fell apart. Bro, could you imagine if Taylor Swift, who is one of the most beloved musicians of all time, I mean, her fan base is like her fan base is like a fan base. If she promoted a scam to them, well, they would have forgiven her, right? But like, it wouldn't have looked good, bro. I mean, that's she is a different level of celebrity than most people. That would have been wild. That would have been absolutely wild. So it's a good Taylor Swift, dodged the bullet on that one. But the guy was planning to give $100 million for 3 years is like NBA numbers. You know what I'm saying? It's not even like it's not even endorsement levels. Like basketball players get paid that. Oh, speaking of this, let's talk about Kevin O'Leary, or let's hear him explain his investment thesis into FTX. Let's see what he has to say.
I want to understand how much money you lost in the contract, but I also want to understand how the investment and this ambassadorship happened. At the time that it happened, you did disclose it, but I want to understand how you went from calling crypto garbage at one point, as you know, to deciding that this was something that you were going to stand behind.
Yes, I recall that conversation, calling it garbage, right here on this show in 2017. That was a time when a New York hotel was being tokenized here, and I was looking at that, and the regulator let me know they were not happy with that idea. And that's when I stepped away from this, because clearly the regulatory environment was not prepared. Then facts changed. I saw the Canadians issue the first ETF with Bitcoin as underlying, Ethereum, then Switzerland opened up, then Australia opened up. And then I said, wait a second, world's changing, I gotta be an investor. And that started my journey. I'm an investor in the largest regulated exchange in Canada, called WonderFi. The wallets are called BitBuy. We're regulated by the OSC. I have my accounts up there. Right. But I felt that getting involved, when I was approached with Sam Bankman-Fried, that I could get an inside seat on what was considered then. And I gotta tell you, the institutional interest in FTX on the U.S. equity was unbelievable. The amount of people that approached me saying, how do I get a piece of this deal? And I said at that time, I am a paid spokesperson. I cannot bring you as an LP. Not a single dollar that I lost is anybody else's money except mine. That's important for me, because that's an issue.
How much were you paid?
Total deal was just under $15 million, all in, including a bunch of agents that I had to pay because I needed SAG-AFTRA release to be able to do commercials for it. And when I did that, I put about $9.7 million into crypto. I think that's what I've lost. It's all at zero. I don't know, because my account got scraped a couple of weeks ago. All the data, all the coins, everything. So then I lost the money I invested in the equity as well. Those are zeros too. It was not a good investment, Andrew, okay? I don't make great investments all the time. Luckily, I make more good ones than bad ones, but that was a bad one.
Okay, let me ask you this, though. When you made this arrangement, this is back in August 10th, 2021, you said the following. You said, to find crypto investment opportunities that met my own rigorous standards, that was your phrase, of compliance, I entered into this relationship with FTX. It has some of the best crypto exchange offerings I've seen on the market. Yes. Even that you were the spokesman, an ambassador for this company.
Yes, because
what kind of diligence did you do around this issue of compliance, given where we sit today?
I obviously know all the institutional investors in this deal. We all look like idiots. Let's put that on the table, okay? We relied on each other's due diligence, but we also relied on another investment theme that I felt drove a lot of interest in FTX. Sam Bankman-Fried is an American. His parents are American compliance lawyers. There were no other American large exchanges to invest in if you wanted to invest in crypto as an infrastructure play. So many of us said,
that's actually not a horrible point. I know he sounds like crazy for obviously the guy's. It's so funny that he's on Shark Tank and he's criticizing all these entrepreneurs who come up with these ideas and then he invests in this nonsense FTT. Like, obviously he wanted the premium he was getting as a paid spokesperson. That seems obvious, but he does have an argument that most crypto exchanges that are large and big are not in the U.S. But why aren't they in the U.S.? That's the question. Because this shit is fucking illegal, bro. Putting up some random coin and saying it's collateral is illegal. That's why they go to the Bahamas or all these other parts of the world. And so the fact that they thought FTX could do it legally without underlying the fundamental infrastructure of these exchanges is flawed, unless you're like a Coinbase, which is heavily regulated. The reason FTX didn't want to be that is because they didn't want to deal with the regulation. It wouldn't make sense to invest in them.
Said, wait a second, who's coming to this deal? We knew, for example,
this sounds like
Tiger.
This sounds like groupthink.
Joe.
Did you know there was no CFO?
Look, at the end of the day, to say that there was no CFO is also a bit of a falsehood. This was a nascent industry with a disruptor at its helm, creating positions that didn't have traditional names, okay? That's just the way it was. In retro...
Some of you in the chat are saying Coinbase. Coinbase was already public, man. That's the problem as well. Like, Kevin O'Leary missed out on Coinbase. Coinbase 2012 raised their seed round. I think 2013, 2016 raised like Series A, Series B. They went public in 2020 at $10 billion, or a little bit more than that, $250 a share. So a lot of investors missed out on that. They didn't get into Coinbase, you know, especially the Sequoias, BlackRocks of the world. Coinbase proved that it was possible to do it, but Coinbase didn't do a Coinbase token or some nonsense, right? They were heavily playing with regulated rules. They were trying to be legit. FTX was not, and that's where, you know, Kevin O'Leary saw the opportunity, and they weren't public yet. So,
retrospect, yes, it's a mistake. However, I feel obliged at this point to go to the end of this, particularly.
What does that mean?
It means that I need to find where the money went. I'm going to start with my own journey, with my own account. Bankman-Fried reached out to me last Saturday, and I said, look, Sam, I am just one investor, but my account has a zero in it, and there are no accounting records. Where did the money go? And to the extent you can help me, tell me, point me in the direction, because I will, on behalf of every other shareholder, go find where this money is. The next day we talked for over an hour, and he walked me through his scenario, and I learned a lot.
Oh,
now,
so
sorry?
What did you learn?
I learned, first of all, I said, what was the large drawdown of your capital? Where did the cash go? One of the biggest uses of cash was to buy back his shares from Binance, which owns 20% of his exchange. And the reason he had to do that, according to him, was that every time they applied for a license anywhere, the Know Your Client got jammed up with Binance, where the ownership is opaque. And he had to buy it back. That cost him a lot, a couple of $1 billion.
But do you think that he was taking customer funds to do that?
Yeah. Did he take that money from customers to get it?
Well, the only way to answer that question, and I told him, and he agreed. I said, look, Sam, you start this journey with me, and wherever the chips fall, that's on you. Because, you know, we're talking about this. I'm going to pursue it. I agreed last night when Pat Toomey called me to sit on that committee next week. I will be a witness there.
You plan to testify?
I've agreed to testify. He called me last night around 8 o'clock. I agreed to testify. I've spent a lot of my time on the Hill.
Yeah, the reason he's agreeing to testify is to save his ass, bro. Like, if he didn't testify, regulators would be like, so you don't want to help us figure out why a $32 billion company went to zero and people lost their life savings? Everyone is in it to save themselves right now. If SBF actually called him, I mean, look, the guy took customer funds. It's that obvious. It's obvious. He took customer funds and he put it into whatever he put it into, trading, Almeida, all that stuff, which led to the drawdown, and then led to the bank run, which also created the liquidity crisis. There is zero way to split that he didn't do that. The question is, did he know he was doing that? And I think that will determine the jail sentence or not. And for some reason, the media is acting like he didn't know what he was doing. He was just a kid playing around, which It's hard to believe, bro. If you just look at his body language, the way this guy talks, it's hard to believe. Kevin O'Leary, it's so funny, man. Everyone wanted to invest in FTX because they thought it's this next great, amazing thing in the crypto space without realizing what they were doing. That FTT token was collateralized. And if they got called up on it, it was like a margin call. You're done. And so none of the investors thought it would happen. It's just that simple. They didn't think it would happen. Kevin got jugged and finessed. Yep. Sam took down 2 billionaires himself. I think Kevin's still a billionaire. He lost some money. But you know, Kevin lost 15 million bucks, but Kevin's worth a lot more than that, I would imagine. But if I'm pitching him on Shark Tank and he says, yeah, I'm not interested in your business, I'm like, but you're interested in a crypto Ponzi? This is what I felt in 2021 when I was pitching VCs. I got rejected from all of them and ultimately went down the angel investor route. But I would go to the VC and you lay out the idea, lay out the concept, show the traction, and then they'd go in and invest in this NFT crypto nonsense. And you're like, you put 17 million into this and you couldn't give me one with something that actually has potential, like versus this bullshit you invest. Like you just invested in bullshit. It's like you're taking a swab at what thing. I know most of the crypto companies that got funded over the past 2 years. I am curious in the next 5 years if they're around. I am really curious in the next 5 years if they survive. Because if they don't, the VC industry is gonna have a hard time living it down. It's gonna be very, very hard. Let's go back into the markets, then we'll get into CNBC and see what else is going on. But yeah, the SBF thing is actually crazy. The thing is, I think it is dying down, but I do think when he gets subpoenaed and testifies, there's gonna be more stuff. Oh wow, Tesla's at 169. Uh-oh. So why is that a Tesla thing versus the rest of the market? Does someone know? Was there some news on Tesla this morning? Why is it dropping compared to the rest of the market? Wow. Let's look at Chris's index thing that he invested in. Is that up? That's down a little bit, 34. So that's because Nvidia and AMD are up, right? But they're up very little compared to where he got AMD. Well, AMD is down a little bit as well. Interesting. Netflix at 308. The stock should not, bro. I want to buy puts on Netflix. I've said this for like the past year that I think Netflix is not a good stock at all. And I want to like put my money where my mouth is, but the market is irrational. Anything can happen. Oh, we just got a new order from the merch store. This is a great time to plug the merch to the 288 people here. Look at this. This is super dope. This is so cool. I wish the sound was on. You guys could have heard it. Shopify. Mick Kukrager merch has a new order for one item totaling $24.20. We're about to look at and read this person's name out loud. AmitIsLegit.com if you want to support the channel. I hate plugging stuff, but if you want to support the channel, we just got merch and it's some fun stuff. Shout out to Jason who ordered a Audio logo, which is my startup with audio discovery on the back t-shirt. It's a yellow and black one. Thank you, Jason. I appreciate it. You should be getting your t-shirt hopefully in the next week. Thank you, Jason. It means a lot. Okay. How much merch did you sell? Bro, we sold like 10 hoodies. We did not move a lot of merch, which I expected. I hate selling. If you guys notice in my videos, I don't even ask to like and subscribe in the end of the videos. Like, I don't know if you guys know, I've maybe asked once or twice. I do not ask to like or I hate plugging. I hate it so much. But I made the merch store because people kept asking for Audio hoodies and stuff. So I was like, fuck it, we'll just make it. And if we sell, 20, 30 hoodies, then it's whatever. It's cool. But I try not to plug. And the reason for this is, and we'll get back into the market in a second. I take this from Gary Vaynerchuk, who's a social media, kind of guru and entrepreneur. The best way, by the way, Google at 94 now, to build an audience is to give them so much value that they actually want to support you. And you don't get value from people, or you don't build an audience by extracting value. You get it by giving value. You just keep giving. That's it. You just keep giving. And then people will reciprocate eventually, but you don't ask for that many things because then it just feels like you're extracting. And I hate doing that, bro. Like, I hate it. That's why I never had a sponsor on this channel. I think I told you guys the story. I got offered 20 grand for some stock app in July. And I was just like, bro, this just feels weird. Like, because then like the whole point of the sponsorship is if you guys don't buy it, like it's not profitable for the advertiser. And I was like, I don't know why you guys would want to buy the product. The product kind of sucked, in my opinion. I don't think it's a horrible product, but I didn't like it. So it was like, it wasn't a good mix. And it was just like for 20,000, it's a lot of money. It's a life-changing amount of money for me. And the guy was serious about it too, but it just didn't make sense. So Yeah, that is the goal of that. Okay, Disney at 92. Now, I tweeted this yesterday. Disney trades at a 157 times free cash flow. They did free cash flow of $1 billion. My question was, why is anyone buying Disney? Market cap of 169 billion. The responses I got weren't that good. The responses I got were like, oh, they're investing capex into Disney Plus, and as a result of investing into Disney Plus, free cash flow is going to suffer right now, but it'll be back. And I was like, I don't know if investing in Disney Plus, especially when Netflix spends $17 billion a year on content, like that expenditure is not going away anytime soon. Even Bob Chapek, the CEO who just left, when he did his interview a couple months ago, he was saying, like, look, like we didn't realize how competitive content was. Like they literally said, because Disney relied on advertising for the far majority and like movies for the far majority of their business. Now, when they go direct to consumer, you've got to get new content on that platform every single second, bro, or otherwise people get bored. So it's hard. Go the Graham Stephan route, admit and grift your view. Apparently Graham and Andre can do nothing wrong because they're back to normal. And once you have your audience, you have your audience, I guess. But yeah, at the end of the day, I don't know, man. Disney, they're gonna have to spend a lot for content. I understand the bull case and their IP is monopolistic. No one has the same IP as them, but it's a little bit harder to imagine that Disney trading at 157 times free cash flow is a good idea. 20 bands, you missed out on the bag. I did miss out on the bag, bro. It was 20,000. I never got offered 20,000, bro. 20,000 is a lot of fucking money. And I was telling the dude, bro, I was like, bro, I don't even think my audience is gonna. It was like Patreon for stock traders. It's like every time I make a stock trade, you guys will get a notification. And I was like, my guy, I don't even make stock trades. Like I like just buy it and I hold it. And he was like, yeah, but I still think it'll be a good sponsorship. I was like, I don't think this is like. I think this is gonna be bullshit, bro. So I tried to tell him, but okay. Speaking of Disney, here we go. Disney realizes it needs to make streaming profitable. Exactly what I was talking about. I don't think I was that crazy saying 157 times free cash flow is not amazing. Let's listen to what Lightshed has to say about Disney as well, and if Disney can compete with some of the bigger players.
Its ad-supported tier on Disney Plus starting at $7.99 today. And the really big news, the big release from Harry and Meghan coming out later today on Netflix. Netflix shares are up over 30% in the last 3 months. Join us right now to talk about this. I also want to talk a little TikTok maybe as well. Rich Greenfield is here, Lightshed Partners. Nice to see you.
Okay, so Disney's coming out with ads. So I think Disney Plus might be more if $7.99 is the. I'm going to look that up in a second while this plays. So if Disney's rolling out ads today at $7.99 a month, Netflix was at $7 a month. That means without ads might be a little bit more.
Rich, let's talk Disney first. How big a deal is this? And how many folks do you think ultimately, I don't want to say downgrade, but effectively downgrade their subscription? Some of that will obviously get made up for on the other side by advertising, but is that a good thing or not?
Look, this is Disney realizing they're relatively mature, meaning they've reached most of the customers who are going to pay for Disney Plus, and now pushing aggressively on price. Like just like the parks. I mean, if you think about it, parks have gone through multiple price increases in the last couple of years. Demand is crazy. This, I think, is looking at the streaming service saying they're losing $4 billion over the last 12 months on streaming. They need to get this to profitability. How are they going to do it is raising what was probably too low of a price and starting to really push on price.
I agree. In 2019, when I saw Disney Plus came out for the price they had it at, I was like, this is really cheap. And I know they got to 100 million subscribers within, I think, 15 months, which was the fastest any streaming platform has gotten to 100 million subs. HBO Max, I still think, is at 80 million, but they really subsidized their price to get users into the door. And that's how they initially grew. I didn't know they were losing $4 billion a year on Disney Plus. Disney stock, man, it's $4 billion a year, and we're going into a recession where people might not even. Disney's not like a staple like Netflix. It's required, but I don't know if it's a staple. Like people have a hard time canceling Netflix. I don't know if people will have the hardest time canceling Disney. So let's see.
And look, people are pretty addicted. I mean, family content on Disney Plus, it's pretty hard to get rid of. Just like that DVD wall that you used to have that was like a babysitter on demand. Disney Plus is a pretty sticky kid service. I think Disney can raise price. Some people will stay and not take the.
I don't know if I fully agree with that, by the way, because there's like Life with Ryan or something, some YouTube channel that gets like 80 million views like every other week, just doing kids content. I don't know how sticky it really is, bro. I think there's a lot of other kids content. Like I get it, but I do think if the parent has to cut the plug, there are some other ways to entertain kids.
the price increase of 38% and just stick with the advertising, and that's fine. Disney's probably neutral to maybe even better off if you take the advertising product. So,
well, that's what I was
don't
going
think
to
there's.
How are you? What's your analysis of how much the advertising product actually creates in terms of value for Disney investors versus the sub version?
I think given how advertisers are dying for new inventory, whether that's on Netflix now that has advertising or Disney Plus, as consumers watch, especially younger consumers are watching less and less linear TV, the thing you keep hearing from ad buyers all over the world is we need to get to connected TVs. We need to reach younger people. That's how you do it. But Andrew, the real question that everyone should be asking today is not the Disney Plus ad tier, is what is Bob Iger going to do? Like, he's taken the reins. Chapek got fired 2 weeks ago. What is Bob Iger's plan? Are they sticking with sort of narrow Disney Plus, meaning Marvel, Lucas, Pixar, Disney Plus, or are they going general entertainment and really going after Netflix and going after, combining Hulu, buying in Hulu? Whatever?
This is an existential question because look at the facts, right? Disney loses $4 billion a year. Disney now has to raise its prices. They're adding the ad tier, Disney Plus in particular. And the question with Bob Iger coming back, which is like this legendary Disney CEO guy, right? Who was here for 15 years. He increased the stock price by 15 times, right? Definitely delivered shareholder value. What is he going to do? Because Disney Plus also includes Hulu and Hotstar and some other products. But like at the end of the day, if you're in America and you're in North America and Europe and you're paying for Disney Plus, what content shows up in front of your face? Because on Netflix, they can have, they just have a lot more mature content. They have like reality shows, dating shows. There's so much diversity at the end of the day. Whereas Disney Plus, I haven't logged into Disney Plus since Halloween when I watched a little bit of Hocus Pocus. So the content moat, I think, is incredibly important because if you need to grow subscribers, which is the goal of Bob Iger, you cannot produce a Snow White or a Lion King every other week. It's not possible because those films are so iconic. It takes time to make those things. That's what gives Disney their IP moat, is that they have 100 years of this storytelling history. It's a little bit of a tough situation. I think it would be important to really think about it. And recession coming up, I don't know what parents are spending $7,000 on a theme park trip, bro. Like, not on the macro. That's going to be harder.
Whatever they're doing.
What's your bet and what do you want him to do?
Look, I think the reality is Disney is amazing. Theme parks, consumer products, Disney Studios, theater movies, like the big movies like Wakanda Forever, Avatar's coming up. It does feel like Disney is best suited to just being more narrow and really owning it, maybe selling Hulu, getting out of ESPN. Like, Disney is really, really good at what it does and what Disney to be. Do they really need to compete across all entertainment? That was certainly the concept behind the Fox transaction. It's not clear that's the direction Iger is going to go. It's going to be very interesting. Obviously, they're losing a lot of money. They need to fix that. And we haven't really heard. I mean, he's only been back a week or two. So, like, this is not a criticism. It's just that the entire world is sort of waiting to see what is Iger going to do.
Rich, Netflix. It's Harry and Meghan, Doc. Everybody's, cuckoo for Cocoa Puffs, either about it or
I think it's irrelevant in the scheme of things. I think it's irrelevant. And it's irrelevant in the scheme of, like, what's going on right now at Netflix is probably the largest content hot streak we've seen in years. I mean, if you think about what happened with Stranger Things over the summer, Dahmer a couple of months ago, now this show Wednesday. I mean, this show Wednesday Addams is their third largest show in English language in history. It's only been out for 2 weeks. Biggest show in a week. Like, they're just having sort of hit series after hit series. And as we know historically, the most important driver of Netflix, sure, advertising helps, but when the content's working, the stock works.
Okay, a lot of you are in the comments. We'll talk about what he said about Netflix in a second, but a lot of you in the comments saying, Amit, families will die without Disney Plus. It's not big for you because you don't have children. It's too important. That is correct. However, what I do have is Rebecca Zamolo. Okay? And I think Rebecca Zamolo is going to get us more content better content than Disney Plus for kids.
What's he doing? It's like he's scoping them out.
Oh.
block wins.
Whoever wins gets to go in the money grab, but Rebecca, if you lose, you're reset to 1 penny.
Keep this fair.
I have Rebecca Zamalo, so I don't need to worry. I don't know why you guys are stressing. If I do have kids, I'll just tell them to watch Rebecca Zamalo on YouTube. So it's not a big deal. Okay, obviously I'm kidding. I get the point, Disney, but I don't think you guys can say the moat is kids, because at the end of the day, are you going for the mass market, which is what Disney Plus is supposed to be doing, or are you going for kids? If you're going for kids, YouTube Kids is significantly smaller than YouTube, right? So, I mean, if you want to go for kids, that's fine, but I don't think going after kids aggressively saves you from losing $4 billion a year. I mean, I really don't think that's the case at all, unless you figure out how to monetize it in some other way than subscriptions from parents for kids. Like, there's a lot of kids in the United States and around the world, but there's a lot more adults that just want entertainment. And if Netflix keeps on their hot streak, one might argue that that's better. This is the kind of shit that's always on YouTube trend, bro. Some of the YouTube trending content for kids is like really cringe. It's weird that the parents even let the kids do it, but they're making hundreds of millions of dollars. I mean, they're making a lot of money. Admit that is the dollar store of children's content. Still children's content, bro. I remember my cousin in 2008 when he was 2 years old, or 2010. I wanted to play like a poker game in India, not a poker. It's like Indian poker, some gambling game with my uncles, and he just wouldn't leave us alone. And I just put on something on TV, and I made him like sit there, and I was just like, shut up. And then he shut up for the next like 7 hours. He was just mesmerized by whatever was happening on TV. I feel like you can give kids anything, bro. I don't feel like it has to be Disney Plus, unless they're like conscious, right? If they're like 7, 8 years old and they need to see the storyline, whatever. But if they're younger than that, you can put anything in front of them, as long as it's like relatively safe. Like they should just shut up and not say anything, right? That's how it should go, I think, right? Shout out to Owen. He is a friend of the channel. He's in the chat. He was a early Upstart investor. I don't mean to out you, Owen, but you definitely have shown us in the chat that you care about Upstart. So I hope you enjoy your Upstart. For those that are new here, Palantir missed out on the $9 billion cloud computing JWCC deal. They didn't officially miss out on that, though, because I think there will be some downstream revenue potential for them to be able to get. And I'll talk about that in a video coming out in a couple of hours, and we'll talk more in depth about it. If you want to see a little bit of analysis, just rewind this to the front of the video, and we'll talk about it. The argument he made about Netflix, though, about the hot run they are on, he said at the end, he was like, they're on a hot run for content, and content is good for the app. The problem, or content is good for the stock. The problem is what happens when they hit a dry run. Like, YouTube hits a banger every single day when it comes to content, because their user-generated content model, algorithmic, curation, all that stuff. Netflix has to pay a lot of money to be on a hot streak for content, and I don't think it's that easy for them to do it. So for them to be able to consistently, I mean, look, man, the stock's at $300 and they have, 3 months of good content. What happens when they have a couple months of crappy content? And now you may argue, oh, well, they're spending so much they can't have crappy content. Getting the next Stranger Things and Squid Game is not easy. And they paid $100 million, Chris pointed out in the chat, to Harry and Meghan. Bro, Spotify paid them something similar. I don't know if it's 100, maybe it was like 20, 30 million to do a podcast. And I don't even think anyone listened to that shit, bro. Like, at the end of the day, like, yeah, you're going to get some people to watch it, but on YouTube, Harry and Meghan will upload a video and that could reach 1 million people organic. Like, it's just such a different model. And I cannot be long Netflix knowing there's this behemoth called YouTube that is just eating up people's attention constantly. I just rather buy Google at that point. If it comes down to, if I'm picking a content play, I pick Google. I still pick Google over the content play. And I know Netflix has premium content, whatever. I don't care, bro. I think people like user-generated content just way more. And Netflix has a big hurdle of putting up really good content every single week to get people to care. Okay, let's listen to this. Markets need to prepare for an incomplete hard landing. Let's listen to the thesis on this one, and then we'll be done for today. My guy, 7, 8-year-olds nowadays know how to torrent to get the shows for free. I forgot, bro. 7, 8-year-olds, they can do a lot of different things. That's true.
This guest says that he expects a 50 basis point hike, and joining us is Jason Furman. Of course, he was the chairman of the White House Council of Economic Advisors under President Obama. He's now an economics professor at Harvard's Kennedy School of Government. And Jason, before we get to what the Fed's going to do, I want to back it up a little bit. I've been thinking an awful lot about inflation yesterday and today. Just everybody's blaming everybody else for it. You can say it's because of wages going up, that it's now really embedded into the economy and it's going to be hard to get rid of. We had a labor leader on earlier this morning who said it's big corporations' fault because they keep raising prices. But really, you got to go back to Milton Friedman. He says it's Washington. Inflation always originates and comes from Washington. And we spent trillions of dollars during COVID, and the Fed left rates low for a very long time. What else did we think was going to happen?
Yeah, I certainly agree with that diagnosis. And you always try to tell individual stories around inflation. But what inflation is upward pressure on everything. You see it on prices, you see it on wages. And when it comes to the private economy, by the way, it's not a morality play. If a business has a lot of customers that show up, they're going to raise their prices. If businesses really want to hire workers, workers are going to, increase their wages. That's just the way the economy functions. And then you have to ask, why is it doing that? Ultimately, it's really the government and ultimately the Fed's responsibility.
So it's too much demand for too little supply. I mean, the other question people keep asking is it different this time than it was in the 1970s? Is it different because we have all kinds of issues like a shortage of labor? We don't have the right immigration policies here. We have all kinds of problems with the supply chain. Can it be fixed this time with the Fed's tools?
It's always a little bit different, but it's pretty dangerous to go out there and say, we've seen something happen 6 times before in a certain way. For example, you can't bring inflation down without unemployment up. You can't see job openings and quits come down without unemployment going up. And we've never, ever, ever seen that before, but we're about to see it this time. I do think anything's possible. I think a soft landing is possible. I agree with that. I just don't think it's the most probable outcome for next year. And, there's only so far your excuses take you. A year and a half ago, the economy was really scrambled by the pandemic. Now the labor market, as Chair Powell said at Brookings, it sort of is where it is. Maybe it's the fault of lack of immigration. We're not going to get a lot of immigrants in the next year. I wish we would, but we're not going to. So they have to go to war with the economy that they have, not the economy they wish they had.
So you think the Fed is only going to raise by 50 basis points, but you think it's going to be a hawkish 50 basis points, I guess, because of what they're going to say around it?
Exactly. I mean, look at, they did 75 in July, and that was a dovish 75. The market experienced relief up until Jay Powell dashed it at Jackson Hole. We've seen a big easing of financial conditions. I think some of that is warranted. Some of the data that's come in, like the productivity numbers yesterday, were a little bit optimistic in terms of unit labor cost growth being lower. Some of the other data that's come in has been really pessimistic. The large upward revisions to wage growth in September and October, for me, were sort of an aha moment that made me much more worried. So I think the Fed is probably nervous about how easy financial conditions have gotten. In a sense, there's been a 50 basis point easing since October. And I don't think they're going to want to see more of that. So they say do 50 at this meeting, but leave on the table, a string of 50s after this, if that's necessary.
As you can see, the 2-year, 10-year is still inverted. 2-year giving you 4.287%, 10-year giving you 3.485 or 3.458%. And again, why that matters is because if I get more money in 2 years, which is less risk than giving my money out for 10 years, that is where, there's an inversion. And at that level, that historically signifies a recession. So what he's saying is that the Fed will do 50 basis points, but it'll be hawkish because they think the economy is still hot from a labor perspective and a consumption perspective. And it's interesting to think about that. We spent $9 billion on Black Friday as consumers and then $11 billion on Cyber Monday. That's about $20 billion in a weekend. Advertisers had to spend to get that attention, right? You don't just spend $20 billion without being marketed to, which means Facebook and Google earnings, I think next quarter should be pretty decent, man. If advertisers are spending a lot, if you get 20 billion in sales, that means advertisers spent money to market, which means that money likely went to digital platforms, which means ad spend maybe didn't decrease that much in Q4. Maybe it does Q1 2023. And so as a result of that, the labor market is hot. We added 63,000 more jobs than were expected, which means more people have more jobs, more money is going into inflation, and more consumption happens in general when people have jobs. And the Black Friday numbers, Cyber Monday numbers that we saw, which means you take into account the massive levels of consumption that are supposed to be going down. It's not supposed to be all-time highs for Shopify's GMV, which is how much money kind of flows through their system, but it is. And it's supposed to be less jobs, less job openings, but that's not the case, which means when there's more jobs, it's a little bit more competitive for wages, which means wages have to go up, which could lead to wage price spiraling. So there's just all these factors that are coming in that leads us to say that it's not over yet, that it's going to be harder to get to a soft landing than what we would think. Samuel, good morning. Thank you for being here. Did Palantir seriously miss out on a $9 billion deal? Yes, they did, but they might be getting more of it. I'll be doing a video on this later. So I'll get a video out today and we'll talk more about it. I might open a position in Rumble next year. Do you like Rumble? I'll answer that in 1 second. Do you use FinWiz? I do, not as much, but I do use FinWiz. So it's definitely a great tool. Okay, this is the last thing I'll say, and then we'll be out for the morning open. Thank you, 250 people for joining. It means the absolute world to me. I don't like Rumble. I did a video about the earnings, actually. If you just type in Amit Peter Thiel YouTube competitor, or if you just go down on my channel, you'll see it. I analyze their earnings. The issue I have with Rumble is I think their total addressable market is primarily conservatives. And I know they don't want to be just a conservative YouTube competitor, but that's basically what they are. And so they're growing decently. I mean, I think they did like 9 billion minutes of watch minutes, up from 7.9 billion last year in Q3. But like, for them to win the entire conservative market, I still think they would be pretty small in comparison. I don't know how much they only did, like 11 million in ads, right? So like they really have to, and they're a public company, they have to put up a lot of numbers in order for that ad revenue to go up. I don't know, man. Rumble as a content play, I would never buy that over something like Google. Like, it's not even a hedge, right? You're like, oh, YouTube's censoring. It's like YouTube's not censoring to the level that many people would leave and go to Rumble, right? Like, there's a really hard investment thesis for buying the stock. And it's also like it came through a SPAC. So those historically, like, they don't have the best reputation. The investors don't like them too much. You know, Peter Thiel put 500 million into it. I think he made his money back as they went public. I don't know if he still owns shares. I would have to check, but I'm not bullish on their long-term prospects because they'll make money. They'll have users. You know, it's just, I think we have like 90 something million MAUs across North America and Canada. I just don't know if the market's big enough as well. Miyoko, I missed the stream. It's okay, Miyoko. Thank you for at least joining here at the end. They are in conservative. Creators like Andrew Tate and Steve Will Do It are on it and are not political at all. Yeah, but the far majority of creators on Rumble are conservative. Like, at the end of the day, that's what Rumble brands themselves as, even if they do it inadvertently. I agree with you. There's a lot of people that don't do conservative stuff, but even the notifications I get are primarily like Ron DeSantis or this, that's like, and I don't blame Rumble. That's how they're building their moat. At the end of the day, if that's what people use the app for, that's what you build the moat off. But it's a little bit harder. Are you going to post a video about your startup? I have posted a lot of videos, Fadi, about my startup. If you go down to Thanksgiving, just scroll a little bit on my channel. I'm pitching Gary Vee on my startup. Click that video, and then there's an explanation of the startup in that video as well. So it's literally like 10 videos down from my channel. So you can check it out and see some stuff like that. Oh, Dia Rumble. Yeah, well, one day let's see if we can get as big. See if we can get this big. Oh, Quarantine Corte, you were the one who ordered the t-shirt? Oh, I love it. Awesome. I didn't know that was you. I love it. Awesome. Thank you so much. All right, everybody. I appreciate you guys. 247 people for being here. We're averaging like 250 every morning, bro. We've done this for like almost, I think, 12 days now, which is really cool. It's really, really dope. It'll be cool to see if we can get this like 500, 400, 500 in the next coming months and just keep it going. I love doing these every morning. It's fun to wake up and have a purpose to open up the market. And I appreciate you guys listening to my thoughts, and let's just make it better and better every single day. Thursday, almost the end of the week. Let's try to open this week well. I'm going to go take care of my mom because she woke up pretty sick. So let's make sure she's okay. Everyone have a great day. And a couple more videos coming out today. I'll see you guys tomorrow on the market open on Friday. Bye, everybody. Thank you.